Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So this is for the trade week of the 25th through the 31st. Do keep in mind, if you are new to this broadcast, I try and do these every 10 a.m. on Tuesday and Saturday, and essentially just trying to be your risk manager. I'm actually going to be flying into Florida on the 28th. So the 27th, I will be broadcasting from still here in California, and we're flying out to Red Eye. I think I'm pretty sure the Saturday 10 a.m. broadcast, I'm just going to put out a notice on the Telegram channel. I'm just going to record it, which I can do either of these days. I'm actually presenting live on stage at our Ride the Wave event here on Friday the 30th. You need this is the Telegram channel. If you haven't seen this before, shame on you. No, just kidding. Just make sure you follow this. You always want to, at very least, follow AP Corporate, and then whichever one of your, or all, for that matter, softwares. You know, the Arrow Trading Room and the Hawkeye Group's been doing quite well from a manual trading perspective. Our beta test for our unknown and unnamed EA, which is not a martingale system, is actually done really well. We have made, depending on the beta testers, probably 20 or 22 people of the 26 in the group, including myself, that I don't have an active beta test account running, but I'm following a lot of the developers' accounts. Or not the, well, I am following the developers' accounts from Israel, but I'm also following a lot of the guys that are pretty instrumental in putting the whole group together. So just seeing some really good results coming out. No changes or no sort of finagling with settings with this one. There is no sort of time frame set for a trading window, you know, kind of like a Neo has with GDP CAD, right? And you can trade it on gold as well. So let's just take out the non-impact folder events, focus mostly on just the red. This is really all that matters to me. Taking a look, you always want to move to the next. If you're looking at this, want to see next week's stuff. So nothing going on Monday. And actually, you know what? With the one question I got in Q&A, can you guys see my screen okay? Looks like somebody's having problems with sound. I was actually having some problems logging into, which is probably my own damn fault. I didn't install the update for Zoom. You guys see my screen here? Okay, all right, cool. So, yeah, you know, I've gotten a bunch of questions on this too. Hey, look me up. You know, I mean, how many 6 foot overweight fat Italian guys are going to be at this event? I mean, I'm not hard to find, right? So just look for the most loud, obnoxious guy in the room besides Josh. Just kidding. But in any case, yeah, look me up. That'd be cool. Say hi. We can shake a hand. Believe it or not, we don't have mask mandates at Auvoria Prime, so we all can actually shake hands and have some genuine fun. So it should be cool. So let's take a look at the Forex calendar here. Monday, nothing going on. Tuesday, just consumer confidence. This price index, anything that says CPI, I don't care the country, right? Start to pay more attention to these, especially because the fact that, you know, a lot of central bankers have been trying, at least in unison, to echo things like, hey, there's no inflation going on. I don't agree with that. I think there is, right? So I'm going to start to pay measurably more attention to these releases, and you can see how, you know, the trend's been going as far as pricing. Our trends here with the U.S. CPI, which is a consumer price index, it's just a measure of inflation, how much more stuff costs, has been going up for almost 4 months in advance, in arrears now. So that's it's not a good trend. And it's why we've seen some disruptions in not only currencies and so forth, but markets as a whole. FOMC press conference. So again, this is a pretty big one right here. Keep in mind these times are, you want these synced with your time zone. Don't be paying attention to just this sync with, this my time zone, which is the Pacific coast here, which will soon be the Atlantic coast. And I think it'd be a lot easier for me just running client accounts and trading and stuff because, U.S. markets open at 9:30 Eastern time, as many of you know, which is a little more difficult out here when you're on the West Coast. You got to get up, wicked early, and markets essentially start trading at 6:30 a.m. out here. So it makes it a little more difficult to, cool thing about being in Florida is I'll actually be able to go to the gym in the morning. So anyway, that's the calendar. Do note GDP as far as CAD. So we get 2 CAD-based items. CAD has been certainly a source of volatility from a currency perspective in relation to many of the majors. So just be aware of that. Let's jump out here to go into our bigger, broader charts. Any questions? The Q&A window is open. Just delete these questions I've answered here. All right. So what you see here is the S&P, okay? Right? We're looking at a market that had a pretty good pullback. Get rid of these numbers so we can see clearly. Market that had a pretty good pullback last week, and then it just, as the inflation and COVID fears subsided, and most of the BS surrounding the COVID fears of everybody dying again has subsided, the markets rallied as well. So here's the UK 100. We're going to start to analyze a lot of broader equity exchanges and just hopefully in a just bringing additional pieces of risk to you. The one thing about the FTSE, which is these are the big 100 companies. This is companies like Unilever and Barclays and some of the other big dogs out there. Really tight range, right? Hasn't made any new highs, but certainly put in a solid base for those in this area. This is DAX index, Germany, very much the same, but closer to highs, but a tight range it's been in. Notice the yellow line has formed. This was probably like midweek last week, I think it formed. Pretty solid resistance from that perspective. Okay. And then the stock 600, which is like the European S&P 500, if you will. Notice that has been acting much better because I think it takes a lot of cues with a lot of these global companies that comprise the S&P 500 as well. So in a very similar chart to the S&P 500. And you'll oftentimes find that because many of these big global conglomeracies trade in lockstep, depending on the country, is not as important, right? So emerging markets essentially running in a fairly similar, albeit towards the lower end, big support right here. DXY, daily chart. Let's focus again on this. Now, we can draw, and it's not going to be perfect. I'm not going to muck up the screen with this stuff, but you can draw essentially a contained line, if you will, at this whole 93.40 area I've been talking about for damn near a year, and how it's been really contained in this whole 93.5 to 94.5. I mean, this has contained the dollar for a whole year. Whereas on the bottom side of this, the edge of the cliff, or the yellow line area down here at this 89.30 area. I don't know. I doubt it that this is going to do anything big this summer. Volumes, if you've noticed, especially in the S&P as an example, it's just the broader market volumes have been lower. So that's telling you that a lot of people just, stuck in the house for the last year. They're out vacationing, out doing stuff. Volumes are lower, which is very typical into the end of July, and certainly for August. The biggest and the wealthiest traders, which push most of the volume around globally are on vacation until the beginning of September. So just understand that. Doesn't mean low volumes. We can't have some sort of exogenous event that comes out and really shakes the foundations of the market, but it's been quite quiet, And the good thing about this from a risk management standpoint is, provided, and nobody really, with the exception of probably a few that are concerned about inflation or a few that are overly short all these markets, right, especially in equities, nobody really wants to disrupt the apple cart right now. So just understanding seasonal headwinds or the lack thereof is a piece of what I do as far as risk management from a global macro standpoint, and just understand the economics of whether it be volatility or not in place, right? So as we're moving in here, just understand, got a fair amount of convergence, divergence, all kinds of things here going on with the moving averages on a daily chart. Remember, each of these candles represents a single day. So a lot of divergences going on that really could keep us trading in the upper end of this zone. How does that play out for the US in terms of its relation to the euro? I always want to show the bigger move here. Now, obviously, this is, we'll just show 2020 to now. So this is the broader move. This is almost the exact opposite inverse of the previous chart. But with the fact that, we're hanging on the edge is this zone right in here from about the 1700, well, the one spot 1700 area all the way down to maybe about 50 pips lower at the 1650 area. This is that whole zone I think is going to contain us. Probably, I would imagine at some point in the next probably 6 weeks, we'll have a test of this area. So it'll be a pretty big tell as to whether or not this holds. Obviously, I think the at least in the short term, the dollar short trade has become a really crowded trade. So as the institutions or the algos in many cases are going to want to go up in various forms, whether it be currencies or in a commodity or some sort of credit space, they're going to want to come in and sort of torture the dollar shorts. That's kind of what I expect to play out. I don't know when that's going to play out. I don't know how long it's going to play out. That is very difficult things. But in terms of the general trend, and I guess if I put this stuff on a Renko chart, which has more of a smoothing effect to it than each day's candle, I still prefer looking at price action. But longer term, folks like to look at Renko charts. I mean, the trend is still up long term for the euro in its relation to the dollar. GBP, a little bit of a different story. Similar chart, coiling up here. I've been talking about this a lot, so I'm not going to bore you with all these again. Essentially just looking at a little bit of a rally. What does all this mean if you're trading these currencies in some sort of MAV based, where you have to approve the trades coming in? Is that if you're using a martingale system, you can essentially just accept trades in both sides right now, because we're within a support and resistance line within a broader support and resistance, right? So but it has a coiling effect that I don't doubt at some point, heck, unless I'm wrong in my and a number of my doctor clients are wrong in this whole Delta variant thing, and then it really does rear its ugly head. You will see some big reactions in these currencies. I think you'll probably see the broader market first. But just looking at U.S. in relation to the Canadian, the U.S. is, broken essentially a long-term downtrend. I mean, not by that much in terms of the long term. Somewhat of a flatter downtrend channel that this has been trading in. We broke it. We're sort of testing the top ranges of this just generally in here. But honestly, I mean, the dollar short trade was getting so crowded that you really do need, from the standpoint of sort of a boat getting overloaded to one side, right, has a tendency to capsize. You want sort of a relief trade and something like this before they load the boat with longs, and then the longer term shorts come in and just pound them back down again, right? In which case the dollar is going to continue to decline long term in relation to CAD, strengthening the Canadian currency. Bit of a different story, obviously, dollar yen. This broke a very long term, well, I shouldn't say very, a pandemic related long term downtrend, and now it's in an uptrend. So dollar gaining strength, obviously, against the yen, but not for, 3 months now that it's been basing. 4. So dollar Swiss, not much going on here last time since I talked. Real tight, got a lot of coilings going on a lot of these. No surprise, summer months. Continued sell-off, Aussie US dollar. Broader trend was a rally, with the exception of the first quarter of 2020. We've just generally been in an uptrend since till about June, and then we've been in a downtrend. So one of the bigger downtrends that we've been in terms of time in this entire rally off of pandemic low. So is this of note, just from a duration standpoint of this decline, as you can see here, which is in a fairly tight channel, by the way, as you can see, just drawing the upper lower trend lines of the channel. A lot of this is going to depend on the dollar, obviously, right? What a central bank's going to do? They're going to be changing their monetary policy to reflect more of a tightening, which pretty much everybody's against, right? Because free liquidity and lots thereof in different forms, mostly into what's called primary dealer accounts, brings more liquidity globally in a more looser credit system. Thus, there is more cash and lower interest rates to do things. That's why there's been a boom in all kinds of things. GBP CAD, I wanted to address that. I just got a question on that. A little bit of a crazier move. I think we had a reactionary spike. This is the NEO currency. Hopefully NEO is recognizing this off the top, and this continued into a downtrend. But the softwares have been acting pretty good. There's been some changes in updates to variable, and the Arrow group continues to gain lots of traction in terms of subscribers in their channels. The growth has been excellent. Those that have really applied themselves have done very well with manual trading. So I would encourage you to sort of take a peek at both if you can afford or you brought enough people in to get more than one subscription. I would always recommend some sort of manual trading group to teach you the basics or help along the way of understanding basics, and then have some sort of MAV or fully automated version running another piece, right? That just goes along with my discussions I've had in terms of just diversification. CAD JPY, let's take a look at that. Remember, these are daily chart. So we were getting outside the Bollingers. This green or teal colored line is really just a stretch of a, look at this as like a rubber band. Sometimes it has more flexibility than others. It's actually been quite excellent in fishing down here. They're getting maybe a bit stretched on the downside. This corresponded a lot to some of the sell-offs in the dollar, and then essentially the Canadian, and in relations, at least the yen, has resumed what has been a longer term uptrend, but not of recent. So who knows, maybe this will continue to trend higher. Seems like a fairly decent enough rejection off the low. But again, I still think the problem with a lot of these currencies, if you haven't heard me say this 100 times, it's new to you. I still think it all starts with the dollar first, and in relation to the dollar to all the major currencies, and then you can get into what I would consider to be a lot of the other crosses. Hell, you can actually look at these as all majors, right? But some people break them down as crosses, whatever you want to look at. For the gold question I just got here, spot right here. This was inflation fears. This was coming back. And notice between here and probably some market profile chart, I can line up on that, but between about 19.20 an ounce and about notice how these center lines, maybe of just this particular range right here, kind of capped off the move. So it's almost like a 50% retrace if you're into the fibs. 50% retrace hit, and now we're starting to weaken again. There's been a few more folk globally echoing the inflation. I mean, for gosh sakes, you don't need to listen to any pundit talk about it to know just by looking at the indicators, you can see that we have inflation building, right? GLD is just the ETF, Spiders Gold Trust. You can see how these patterns look quite similar with different pricing structure associated with it. The GBP JPY for the question I just got. The pound yen. A little bit of weekly on this. Yeah, that was my assumption. So 155's 50-ish area. Pretty big resistance from a yellow line perspective on a weekly time frame. So that's contained us so far. Now we have a lower line that's formed as well. Maybe we'll go back down, see a little more weakness. You know, I mean, it's. I think the surprising thing, just of recent, is the weakness in a lot of currencies and the strength of the yen. Yeah, there's another example of this similar chart, a little bit different pricing, obviously. AUD CAD, did I show this one? Back to daily. This is that tight coiling I've been talking about for a while. At some point we're going to break from this. We'll see exacerbated moves in a lot of these currencies. You know, honestly, we're due for that. I don't think it's going to happen in the next month and a half. I could be wrong. But the problem with those sort of outstretched moves, kind of like we saw, maybe probably not to the degree of craziness or movement that we saw certainly in the first quarter of 2020 during the pandemic breakout, but it's just been real quiet. I mean, it's good from a software trading perspective. It's good. Don't get me wrong. But I still think we've got one more event I think that needs to shake out. I just don't know when it's going to materialize. It typically doesn't in the summer. And it's just because of the simple fact that institutions usually aren't doing huge book rebalancings until just before the end of their fiscal year. Many of them's fiscal year, including a lot of mutual funds globally, is October, the end essentially of October. So, which is not a calendar year, it's more of a fiscal year, but it's a big one globally as far as a financial fiscal year. I know a huge chunk of mutual funds, at least in the United States-based investment companies, you know, like a Vanguard or Fidelity or American Funds or, you know, certainly BlackRock, you know, they all have December 31st. So that basically means that, which is normal, that September and October typically bring more volatility in terms of repositioning. For the question I got on the Forex cheat sheet, which is actually a really good piece, you can find it on my Telegram channel as a file, sort of like a crash course in macroeconomics, which I think is really good. It's an older piece, been around for a while. A lot of those abbreviations, the best thing to do is just Google them. I would just Google macroeconomic abbreviation, RIR, or IRR, which stands for internal rate of return. Oil, question I got on oil. Do a little crypto work here as well. So here's a weekly chart on the Bitcoiner. And as you can see from the standpoint of the longer term moving averages, the big one's down here at 20K, which I still think is where we're going. Although some have said, hey, this recent rally is real. And it could be, it certainly could be real, but I don't doubt it to be real to anything more than 40K. I would expect we've got some inventory to trade off, if you will, essentially offload, and that needs to take place until this does one way or the other. I think we've got a lot of folks just hanging on for dear life, which is no risk management term in my book, and you should completely remove it from all of your thought processes. Never be something I would ever recite to at least anybody that's a professional money manager, because they're all going to laugh at you. So it's the polar antithesis, opposite of risk management. It's statements like that to make folks that yell those from the mountaintops and a lot of these cryptocurrency shills just look complete idiots to institutional investors, at least in terms of long term. So the bulls recently, and it's the crypto bulls, and those that are more than likely holding from a lot higher prices that are continuing to shill the movements here, will point to this. They'll be like, well, it was higher volume, right? Well, keep in mind it was higher volume because the weak hands on rallies that are short from these levels, which I consider to be weak hands, by the way, they got barbecued a little bit. They sort of gave up the ghost, right? But with the problem I have with this rally is look at the lower volumes on the successive days. There really was major participation institutionally, right? Or at least whale-based participation. These volumes would be higher than the day it broke off of support. I should say broke higher off of support. See how important that is? Volume is totally tapered off. Matter of fact, volume, which was 1,100 contracts, is that right? I should say 1,100 coins. 1,100 coins on Friday, is that right? So then we had a little bit more than 2,000. I mean, that volume stinks. And look at the volumes you saw here. In this case, you had 32,000 traded in one day. I mean, that's volume, in my opinion. Obviously, this is an expensive coin, even at these levels, but the volumes have just dropped off. That's the concern I have for these rallies. Notice every time this has started, you've had a bounce, right? Look at the next day. These volumes were flat while it moved up. So no surprise with those flat volumes, what's going to happen? The bulls aren't emboldened. I don't know necessarily the shorts are emboldened either, right? But what happens typically in stuff like this is you have weak longs are like, well, hell, I'm going to take my 20% right here or 30%. I'm out, right? Probably wasn't a good, well, in hindsight, it wasn't a bad move. It's just trying to protect any profit. But then as you continue to drop down, albeit not necessarily, can't read too much in this because it is summer volumes, but just trying to give you guys a little bit of a tell. I would like to see something. Now, again, I could be like totally wrong on this, and it could just absolutely rip through 40K coin, which essentially is the swing fractal high right here, like right around 41. I just don't see it. So what one wants to do is you want to peek over into Second biggest currency, Ethereum. Take a look at its chart. Looks very similar, right? Again, rally off the bottom, barbecued a few shorts, very short term. Look at how volumes just dropped off. Probably go through some of the other coins, which I won't even address because I think they ain't worth a crap. Although I probably should put XRP on here. This is the weekly chart. So goes Coinbase, so goes crypto, by the way. This is a pin action I'm always talking about. Daily chart on Coinbase. I think this thing's on the precipice of blowing through 200. Again, you can always be wrong on this stuff. So I think it's critical that one has the ability to have sort of a mirror image of whatever your analysis is, and asking yourself, I'll be talking about this next week in Orlando. Just look in the mirror and say, what if I'm wrong? What would I do? What will my process be? And I've been trying to teach my kids is because the problem with forming a theory is that if you are sort of the inventor of your theory, right, you are the boss of it. You are subconsciously a lot less willing to beat up your own argument, right? Unless you're really some of the smartest, minds out there, whether they be, guys that have built fortunes and hedge funds and, stuff like that, just exceptional traders, exceptional people in, a lot of the think tanks around the world, may not be traders. They have a completely unbiased opinion. They call it what's called boss theory. So I'm going to talk about this all next week, but I think it's a good way of sort of beginning to train you that regardless of the, prognostication, whether it came from you or your friends or a boss or somebody in your family or, wherever, right? It should be on the same plane with your ideas. Problem is if the ideas were crafted by the typical brain, it puts a much higher association of that thought in terms of its validity, right? So it's like, yeah, I'm right? They call these guys right fighters because they're always looking to prove that they're right. Where some of the smartest minds, they may think they're right, but they're willing to go outside of it, both arguments to and for, or I should say for and against the particular theory. So that is one of the best ways, in my opinion, to retrain your subconscious for any idea you have. That you need to be able to do that real quickly, obviously, in trading. So, like for instance, is an example of one of the top. Jackie's done really well in the Arrow Room. Looking forward to meeting her. She's a real smart cookie. I think that if she comes out with an idea like, hey, it's long U.S. dollar here in relation to the euro, right? I may be like, well, this is a really good idea, but I was thinking we could go long here, right? Even though Jackie may be smarter than I need to put those ideas or those your theses, they'll call it. I need to put it on a level playing field. I need to be able to have both for and against or opposing arguments to any of that. This is maybe not the best explanation of it, but I don't really want to give away some of the content I'm going to be talking about next week in Orlando. So I'm trying to present it from a different process. But at the same time, it's critical, and what it helps the brain essentially do is that you don't essentially tie any kind of boss to your own ideas. If that makes any sense. And if it doesn't, tune in next week. Right, so I think here's the cues, since I know some of you are trading NASDAQ. New high here, by the way. So the earnings have been good for a lot of tech stocks, a lot of NASDAQ based, a lot of tech companies globally, period, that have been executing exceptionally well. Obviously, those of a semiconductor have been some of the best, but they are also some of the most priciest in terms of global pricing for individual stocks, just based on the commodities. I did want to address real quickly FinViz here. For those of you you that haven't finvized it yet, it's finviz.com. It just stands for financial visualizations. You click on the futures and then you go to charts. Make sure you're on the daily screen. You can see the relation of all of the charts to each other. Dollar in an uptrend, right? Euro down, yen down, pound down, CAD down, Swiss down, Aussie, NZ. So they've been the opposite of the dollar, right? You can certainly look at this in 4-hour windows or 5 minutes or 10 or whatever. But I just wanted to see just a broader relation to each other, see what's going on in bonds, right? Some of these have been creeping up in price, right? Why? Because the interest has been higher in credit as a flight to safety. So the more buying you have in anything, the more typically the price will go up, right? And hence yields going down. That's why it's been very cheap. One thing of real note in this whole shebang, and we're looking at daily charts here, is the absolute crashing in the lumber market. So smart money, actually, let me go back in relation to the other commodities. Smart money, right? Everybody wants to be the smart money, right? And in my opinion, there's probably maybe about 15 individuals on this planet that represent smart money. And they're all billionaires that have started and ran very successfully, in many cases, their own hedge funds. Then they're all manually traded funds. These are not high frequency funds in terms of the category I look at as far as smart money. But when you look at the commodities just globally, I don't know what happened with coffee. I haven't paid enough attention to this. I mean, this thing just went nuts. But we've seen trends up in prices for not necessarily but the important stuff like copper, right? Look at the downtrend we've been in copper pricing, albeit this looks like a big old downtrend, really isn't if you just look at the scale on the right, and now the recent rip. And this may have just broken along longer into midterm type downtrend this last move, just last Friday, which is very interesting. But while even though the demand for semiconductors in many cases shortages globally, that was being priced into the markets way in advance. So as you'll often hear people say, markets are always pricing in future events, right? A lot of people are like, well, if the demand for semiconductors globally is so ridiculously high, why wouldn't copper be skyrocketing right now? Well, now the pricing of copper, since essentially the peak we had in the beginning part of May, it's been a downtrend, right? So even though but this is a tell, right? So you're always looking for hints through the sort of the, what do they call those things where you like go to your front door and look through the peephole, right? If you're looking through the peephole, you're trying to find cracks in the armor, right? You're trying to find, what do they call it, fissures in a dam, right? This to me is a tell. What it's telling me yet, I don't know. But this has been surprising. So if we take this look on who knows, I could be completely full of shit on this thought, right? So if we take a look at the bottom here, I would say, well, we're back to where we were longer term on lumber, right? And here's a weekly chart on it. Right, but if this economy is doing so great globally, now we back down to longer term. Hell, I would say probably if I put a market chart, a time-based market profile chart, and this would probably be the center line somewhere right here. Why are we back to the point of control over the long term if the economy's doing so great? I would think we'd be up here with lumber pricing, right? And who knows? We may rally back, right? And I could be wrong in this thesis. But this is telling me something. I think it's telling me things are cooling off a lot more than people think, at least as far as the housing market, right? So they call it Dr. Copper for a reason. Now, you can usually tell what's going on globally by the price of copper. Now, if you look at what I consider to be lagging indicators, this is anything energy-based, right? It's telling us we're in a raging time. Who knows? These three guys, in terms of the energy space, they could be right. I think this is probably just a burn the shorts type move. And keep in mind, these are weekly charts we're looking at. So if we take it to a monthly, it gets to be a little bit of a different story. So now we're looking over 5+ years in this whole space. You can see much different stuff playing out. But again, from at least the perspective of where's Dr. Copper at right here, okay? It's telling us we're in a boom longer term, but shorter term, no. And then look at lumber. I've been paying more attention to this because I'm looking to build a house. So, but maybe I should just build the house out of block because it's in Florida. But just make this a little bit larger. I like to look at this stuff because it just shows me correlations of different commodities. There's always hints you can take away from this because it's always about picking up an extra nugget of something nobody else is seeing. Now, I don't consider to be the smartest analyst. I don't have the time to put in what many of some of the top analysts do around the world in this area. So I default to just listen to them. But a lot of them are pretty concerned with this chart. I'll leave it at that. Questions on anything? Because if not, I'll see y'all on Tuesday. If you want to do something for your good friend that's in this biz, that's maybe a subscriber, or you want to help them join as a subscriber, make sure they watch the developers' calls and mine each week. At the very least, watch the recording. They will be much better situated, including yourself, to understanding what's going on. And I think I try to put these really in the frame that I'm teaching you guys little bits and nuggets each week, just like I learned over the last 20 years, just being a sponge and finding the smartest people and latching onto them. And in many cases, I became a pest. But thankfully, there was a number of Goldman analysts and traders over the years I became friends with way back in the day that were willing to deal with my pestiness and my constant thirst for knowledge and trying to figure this out. But at the end of the day, one of the most important things psychologically in this whole game, investing, trading, allocations, all that fun stuff, is that you have to be comfortable dealing with ambiguity. There is no perfect system in any of this. There is always going to be ambiguity. So your ability to weigh those factors of indifference or indecision-making ability is going to be critical to your success. And thank you again, guys. All right, so question. That's a good question. Yeah, I got all my answers. Okay, cool. All right, guys, have a great weekend. Be safe, be kind. Drink too much if you're like me. And I'll see you guys on Tuesday.